Okay, so today's topic is statement of financial position. This particular statement of financial position shows you the actual position of your business. Okay,
Okay, sir.
so it is nothing but having all the list of assets what you own and all the liabilities what you owe or what your business owes. Okay,
Okay, sir.
so these activities are to be done by you. It's like these are very simple ones.
Sir, I can't see the screen again.
No, I'll share once again. Now, please confirm.
Yes, sir.
Yeah. So these activities are to be done by you,
Okay.
Fatima.
Yes.
So they are saying idea generation, list out everything you own and you owe. So here he is speaking about asset. Here he is speaking about liability. After explaining you all the things, you will be in a position to do that.
Okay, sir.
So assets, something which is owned by the business, controlled by the business, and on
Yes.
which economic benefits are expected in the future is an asset. Correct? It's
Yes.
the economic resource. Fine.
Yes.
And the second point is its cost should be measured reliably. That means it should have a cost. Like human resources are important assets for us.
Yes,
Theoretically, we
sir.
say that, but they cannot be shown in the balance sheet. Why? Because they don't have a value. Their services can be valued, but the human beings cannot be valued. Correct?
Yes, sir.
So these are the examples of all the assets: factory, office buildings, warehouse, go downs like delivery vans, lorry, plant, machinery. All these are economic resources, and on from them we expect future benefits. We use machine to produce our
Yes, sir.
goods, and those goods we sell, we generate revenue. So all are giving us future benefits, correct?
Yes, sir.
And then comes the liabilities what we owe to outsiders, like we take a loan, we have to repay that, or we take goods on credit basis from supplier, we have to repay that. Okay, so this again you have to do, this again you have to do. These are all simple ones. Okay, and
Yes,
I'm
sir.
leaving these all on you. Fine.
Okay. Okay, sir.
Yeah, just give me a second. Yeah. Yeah. So now comes the capital and equity. This is nothing but what you like invest in the business, correct? So
Yes.
I gave you an example of car that day. So you very well remember what I mean here, correct?
Yes. Yes, sir.
The 2 lakh down payment, what you pay is nothing but your equity. So this is the format in which you have to show your assets and liabilities. You make a balance sheet. Assets are non-current assets. That means which do not which exactly have physical substance. That
Yes.
means these are tangible assets which you can see, touch, feel. Correct?
Yes, sir.
Land and building, office equipment, long-term assets, and then current assets are the only difference between non-current assets and current assets is the non-current assets will give you economic benefits like beyond a year time. Okay, that means you can expect economic benefits only in long term, like that is
Yes.
after 1 year,
Yes.
and within 1 year the assets which can give you economic benefits are called current assets. Both give you economic benefits, but time factor is different for both of them. Okay,
Yes, sir.
so inventory, receivables, then you have to adjust allowance for receivables, like if you have some bad debt, that means you cannot show some amount which you will not receive in the future. So if you are skeptical or doubtful that you'll lose some $2,000, some of the customer is doubtful, you are doubtful that he will not pay you, remove that. Okay, and show it as a loss or expense in the P&L. And see, you have to deduct here. One treatment is in the balance sheet, another treatment is in the
Yes.
P&L. It's a loss.
Yes.
A
Yes,
reduction
sir.
in the value of asset is a loss or expense that we already
Yes.
discussed, correct?
Yes, sir.
So, and all these are like current assets. And then comes the total assets, the total of current and non-current, and then come the liabilities, whereby capital and any profits you, this is a sole trader's balance sheet, not a company form of organization's balance sheet. The the videos of financial statements which I shared with you was somewhat different from this, if I'm not wrong,
Yes,
correct?
sir. Yes, sir.
That was for a company for that was with respect to a company form of organizations. This company form of organization. This is with respect to a sole trader. Okay,
Yes, sir.
sole trader is a single business, a single owner owned business. That's what.
Yes, sir.
And then yeah, any profits what he earns in the business should be added to capital or should be taken in that account. And then any profits like any drawings, if he withdraws for personal use, he can withdraw from this capital account only. That is a rule.
Huh.
And yeah, and non-current liabilities like bank loans, current, these are also the ones which can be repaid like beyond a year's time. For these are long-term loans, this you have to settle within a year's time. So this is what I have already explained you. And yeah, what is the relationship between statement of financial position and profit or loss? See, first you make the profit or loss statement. Uh, okay, you make the statement of financial position at the end of the year, and also profit or loss. Whatever the profits you get from the statement of profit or loss, you transfer to statement of financial position. Correct?
Yes, sir.
That's the only thing. And some treatments happen in statement of financial position as well as in the statement of profit or loss simultaneously. The one which I told you right now, you had receivables and you deducted your allowance for receivables. Here you are deducting, that is one treatment given in this statement. The another treatment is you have to show this in this statement also as an expense, correct?
Yes, sir.
So you have to give dual treatments. For example, you have non-current asset and it is getting depreciated every year. So that depreciation should also be shown here. Allowance for receivables, depreciation for receivables, sorry, depreciation, because all these are expenses. One, you are deducting your asset and expense you are showing in this. If you have any income, you'll be adding to the asset and you'll be showing under this. Understood?
Yes, sir.
So that's what I did. We discuss about the statement of other comprehensive income also. Did we discuss
No, sir.
OCI, other comprehensive? Okay, okay, we did not discuss. I think that hasn't been discussed yet. Why? Because that comes under company form of organization. Fine.
Yes, sir.
So these are the users of financial information already discussed: investors, employees, lenders, suppliers, customers, government and agencies, and public. In the first session itself, I was when we were discussing about the flow chart, I discussed this one with you. Correct?
Yes, sir.
And all the activities I'm not explaining, it's your task to do. These are all very simple activities because I want to conduct test on this chapter very soon. Okay,
Yes, sir.
probably why very soon, tomorrow itself I'm going to conduct a test on this chapter for you
Okay, sir.
because I'm winding up this today, sorry.
All right.
Now comes the accounting records, which we already discussed about accounting records. Accounting records are maintained by the businesses, of course, and that is called bookkeeping. Okay, the process of recording all the transactions in books of prime entry, that is journals, is called bookkeeping. This is done by the junior accountants. Fine. Someone
Yes.
who is doing a BCom, Bachelor of Commerce course would do this kind of task, and definitely his experience, with his experience, he will grow. But of course, he would be like revolving around this task only,
Okay, sir.
because more like responsible task will be given to a professional or a higher grade accountant. That is, someone does ACCA would get that kind of task. Those guys will be looking beyond this bookkeeping. They will be involved in preparation of statements and other tasks. Okay, this bookkeeping is done by the bookkeepers who take care of all the transactions and records. Okay,
Yes.
record them. So, the businesses what exist in today's world is sole trading, partnership, and limited liability company. Uh, Sole trader is the oldest form of business. Okay, everyone knows who is a sole trader. You see the people in the provisional store around your house. They are like just opening a shop, registering it, selling the goods to people. Okay,
Yes.
and not much of paperwork is required for such kind of establishment because they are not, no investors are not involved in those businesses. Many people are not investing in that. He is doing he's investing his money and starting a business. So he's the one who is going to take care of the losses or profits, whatever it is. He's going to enjoy or he's going to suffer. Correct?
Yes, sir. True.
And he is like working with 1 or 2 assistants to support him, and he pays them fine. And he also has to pay taxes to the government. That is required, because whatever the revenues he generate, you have to pay taxes to the government. Partnership is like extension to sole trading, whereby not only one person, more than one person, minimum 2, maximum can be, like, see, different countries have different types of law. In
Yes.
India, they say 50 maximum people. In UK, there may be a different law. Fine.
Yes, sir.
And here what happens, they kind of, suppose there are 3 or 4 partners who are involved in a business, they can share the task, they have different expertise, and the business can be a bigger one than a sole trader. Correct?
Yes, sir.
And there's also limited liability partnership. The liability is only limited to the extent of capital what they bring into the business, not more than that.
Yes.
Limited liability company is nothing but the companies in which the liability is limited. That means the shareholder, suppose if there is any loss in the company and there is any default in the company happening, that means company has gone into deep losses, and company needs to pay to its creditors or lenders. At that point of time, the liability is only restricted or limited to the extent of investment done in the business. If I invested 10,000 rupees or dollars, I am liable to only suffer a monetary loss of, or whatever the liability from my part would be, of $10,000, not more than that. Correct?
Yes, sir.
What do you mean by this? For example, sole trader, if he goes into losses, and when he's supposed to make the payments to the like his lenders or creditors, he has to sell his personal assets to do that. Correct?
Yes, sir.
But company can sell the company's assets which are owned by the shareholders. That's it. And those are the final, the company can sell it and repay to the lenders and creditors. The shareholder is not personally liable to anyone. He is not going to sell his personal assets to do that. Correct?
Yes, sir.
Until and unless some personal guarantee is there, but it is not there in any case. Sole trader has that problem. So let us go in detail about this. So sole traders and partnerships are not separate entities from their owners. That means sole trader means the business is run by the owner. The owner is the business and the business is the owner. Whatever you can say, you can say. Those cannot be separated. They are connected to each other. Okay.
Yes, sir.
But a limited liability company, that means a company form of organization, is something different. So the shareholders of the company are the ones who are just the investors, and they appoint board of directors to run the company on their behalf, because to run such a big organization some expert should be hired. Okay, so they appoint some directors who are experts in running companies, and the shareholders are only the ones who are looking for profits at the end of the year. Understood?
Yes,
They
sir.
are not involved in, if you are a shareholder of Reliance company, you cannot go to Reliance Fresh shop and tell this shop belongs to me, these vegetables, this Reliance Digital, all the electronics belong to me, I am the owner. Why? Because I am the shareholder. No, it doesn't work like that.
Yes, sir. Yes, sir.
You are the one only who is supposed to get see forward to your profits. You are an investor. Okay, on
Yes.
your behalf the company is run by the people whom you appoint to do that. And a company form of organization itself is an artificial person created by law, because it has all the characteristics like a person. How? See, we are existing, our company is what we form, they will exist. Second point, we sign the documents, company has a common seal. Okay, without the seal, see, directors cannot sign any document without company seal. It is not accepted. Understood?
Yes, sir.
Seal is a seal in the sense stamp. And we are we do activities, company also, like lot of activities are performed in a company. The only difference between us and the company is we have right to vote, company doesn't have. We can breathe, company cannot breathe like naturally, but it is existing, that means it is there. That's
It
what
is there.
legally it is.
Yes, sir.
Until and unless it is liquidated or you close it, it is there, it is still there. Okay.
Yes, sir.
And any company, if you form, you have to register that with the company that with the, what we say in India, we register the companies with the registrar of companies. So the company or form of organization should be registered with the registrar. That is with the company's house. In UK, they use the word called company's house.
Company's house.
And they have to make MOA, Memorandum of Association, Article of Association, bylaws of the company. They have to submit that to the registrar, and company should have at least one director. Okay. See,
Yes.
these are all what you're studying is companies law, like some part of companies law subject has come here. So when you'll be studying the F4 paper, you'll be again coming across all this.
Yes, sir.
And who may also be a shareholder. The director can be also a shareholder. Accounts have to be prepared at the end of the year, financial accounts, and they have to be submitted to the company's house. That is the registrar of companies, which we call in India. They are the ones who look after everything regarding a company. The statements, whatever we are preparing, that is the financial accounts, should be audited by a practitioner. If you become an ACCA, you start your practice, you can audit that. And those accounts should be published. That means shareholders should get the access to that, so that they can check what the company has done in the year and they can know the actual position of the company. So like that there are lots of different advantages and disadvantages of all the kinds of business. The one which is very much scrutinized, or a lot of paperwork or legal formalities are to be performed, is the company form of organization. That's it.
Yes, sir.
Because here public is involved, and the company cannot defraud or do any sorts of fraud with the people. That will kind of what we say bring a bad name to the country itself, that this economy is not safe economy, because here the companies are defrauding their shareholders, and it's not a safe place. This economy is not that highly regulated. Here the companies are of such kind, the punishments and all, why these kind of things are happening, why there's no scrutiny. So all these factors come. So you take some underdeveloped countries or some countries which are developing, like I will take some countries named like Brazil. See, companies are existing everywhere. It is the people want to do business, but some, like if I speak about North Korea, do you think any company would dare to go there and start their business until and unless that Kim Jong Un is not there?
No.
I think you know something, you have some idea about geopolitics.
I do, yes, sir. Yeah. I'm very much into politics.
Geopolitics, international politics.
Yes, sir. Very much.
Great. That's great then. Good.
Yes, sir.
So you know that he's a dictator, and such kind
Yes,
of
sir.
places are not safe to do businesses. So
yes, sir.
next, the concept of business, it's a separate entity. I already told you. So what I've told you, the features of that. Governance. See, governance is nothing but the act of government governing the state is governance. So how the businesses are governed? Definitely, the businesses are instructed to prepare the financial statements at the end of the year and disclose it to the shareholders. If that is not done, then these people will be hiding everything. And to prepare the statements, they have to follow the accounting standards. So yes, there's very less chance of any cheating or any malpractice, correct?
Yes, sir.
And corporate governance is nothing but the act of the government governing the corporate sector by framing certain laws, rules, regulations like companies law, labor laws, tax laws, Industrial Dispute Act. These are acts, okay? And accounting standards are mandatory to be followed by every company to prepare the books of accounts or statements, and then audit standards to be followed for conducting audits, and like a lot of things are there. So all the laws comes into picture, environmental laws, so that the company should not pollute the environment for their own sake. See, we want sustainable development. We don't want someone to just take away all the resources for his profits and not leave anything for the future generation. We don't want that. So all these things the government would take care of. So corporate governance are nothing but when these laws are made, the governments want the companies to follow, and like company secretaries, all these people are the ones who have to see this, whether companies are complying with all the governance codes or not. Okay. And directors should also see. He's a KMP, key managerial personnel, companies directors or company secretaries who are specially appointed for this purpose. So they should see that. Legal responsibilities of directors are nothing but directors have a duty to care, duty of care to show reasonable competence and may have to indemnify the company against loss caused by their negligence. That means they have to compensate. Understood?
Yes, sir.
Directors are also said to be in a fiduciary position. That means they are working in the directors are having a fiduciary relationship with the shareholders. That means the directors are working like the shareholders agents in the company. They have to work for the best of the shareholders. Understood? They are
Yes.
not working for their own good or for their own, they don't have any, they should not have any motives. They are working solely for the shareholders betterment. That's it. So their betterment is taken care by the shareholders. Na? They are paid very hefty like fees, like 1 crore, 2 crore is the package they get.
Yes,
Do you
sir.
think is that less? What do you want more than that?
Yes,
So
of
you have
course.
to honestly work for the, and in good faith, you have to work for the shareholders.
Yes,
In
sir.
UK, the Companies Act, 2006 sets out 7 statutory duties of directors. Directors should act within their powers, promote the success of the company, exercise independent judgment, exercise reasonable skill, care and diligence, like hard work they should have. No conflict of interest. That means they should act for the best interest of the shareholders, should not have difference of opinions, not accept benefits from third parties, no kickbacks, no gifts, no foreign tours, trips, jewelry or like very lucrative gifts. Declare interest in a proposed transaction or arrangement. That means if he has something, he has to declare that, like, some kind of like I have given this task to my relatives or whatever. If anything is there, anything, any pressure they have, they should disclose. So an
Yes.
overriding theme of Companies Act 2006 is the principle that purpose of legal framework surrounding companies should be to help companies to do business. Yeah, see laws. See, why are the laws framed and imposed on
Uh,
citizens? See, this is democracy for the people, of the people, by the people. So now we will question that, then why the laws on us? Laws are for betterment of the society. Those are imposed for our betterment to keep us in control. Otherwise, if there is no rule of law, then what will happen? It will become a fool's paradise, correct?
yes, sir.
A chaotic, a banana republic, I can say. So a director's main aim should be to create wealth for shareholders. Of course, maximize the wealth of the shareholders and create wealth for them. In essence, this principle means that law should encourage long-termism and regard for all stakeholders by directors, and that stakeholder interest should be pursued in an enlightened and inclusive way. When exercising the duty, directors should consider what? The consequences. What if they take some decisions? What are the consequences it will have? It will have in the long term. They should see the interest of employees. The need to develop good relationships with customers and suppliers, of course. They are the ones who are leading from the top, so they have to ensure that. Impact of the company on local community and the environment. See what impact they are having. See, now if I speak about some company, see, every one of us are having some favorites. What is like, if I ask you a question, you being in 12th stand, like your graduation, undergraduate, but if graduation first year, but still if I ask you a question, what is your favorite company? An answer would come from you, correct? So if I
Yes.
ask you what is your favorite company, what will you say?
Apple.
Apple. So why did you use Apple? Definitely you are expecting something from Apple. You look up to
Yes.
Apple because you know like they are doing good practices. Probably they are following laws, rules, regulations, compliances. Okay, their product is the best in the world. But you may have some complaints why it is not somewhat cheaper. Maybe
Yes.
company is not able to make that somewhat cheaper. Maybe all those technologies are something which are unique to the world. All those things, XYZ.
Yes, sir.
And maybe they are doing something good for the society, also creating employment, that's generating employment, doing some corporate, as per corporate social responsibility, doing some charity, or they will do, of course. Their
Yes.
valuation is some $3 trillion, equivalent to the Saudi Arabia's economy, maybe three or
Yes.
four, whatever it is. So if one Apple company's assets are sold, 55 countries can be bought in the world. That is Apple's status. Okay.
Yes, sir.
Apple is that. And if you see, like I regard Tata, it's like my favorite company.
Okay.
So because this gentleman Ratan Tata, the words are less to describe
Yes,
him.
definitely,
And
definitely.
he's a thorough scholar, thorough gentleman, and we can get inspiration from this person who Azim Premji,
Azim
Azim
Premji,
Premji,
Wipro.
yeah, Wipro. These people are biggest philanthropists in the world,
Yes.
and what more you want actually? They are not like, see, whatever extent to it, like they have big hearts to do charitable work, correct?
Of course, yes, sir.
See, we are not going to take anything with us. What we can share, we can share. So what these people are rich people, they can share that. What we can share, we should give to society. And we should not expect society should give me something. No, what
Of
we, because the giver is always blessed by the God. That's the reason why he is giving. That's it. Now, so the need to act fairly as between all members of the company. Of course, he has to do that. This list identifies, I thought this is a small chapter, but it's a very big one, extended one. I thought I'll
yes.
take management accounting topic also today, but no, we'll see. We'll see what we can do. First chapter is a big one. I'm ready to take a test also for you.
Yes, yes, sir.
Yeah, can I give you this chapter's video regulatory framework? I have a video of this theory chapter. It doesn't, I don't think we should discuss this chapter.
Okay,
Says I
okay.
have this video, simple chapter it is.
Yes, sir. Send it to me, sir.
Yeah, because why to waste a class time? I am going to take F2 tomorrow, but we'll
Yes.
see. If you want a fresh, yeah, like explanation, I can give you, or else if you want video because it's a theory chapter. If I give
Okay,
video,
sir.
you'll understand everything.
Yes, sir. Better give me that.
I'll give the video. Why to waste time? Correct.
Yes, sir. Yes, sir.
Yeah. So this chapter is done according to me today itself. I'll share the video by tomorrow morning or today evening whenever I get time. So I'm into the last paragraph. Let us mind up that one. So one chapter's task is done almost now. So the responsibility of financial statements, the financial statements should be prepared by following the standards, and financial statements should not be prepared to impress someone. It should be free from any misstatements, no errors, no fraud. Okay, see, errors are something which are mistakes. Fraud are something which are done purposefully.
Purposely. Yes.
Purposefully done mistakes are fraud. By mistake something happens is an error. Fraud should not happen, or if it happens, then prevention and detection of that is very much required. Directors should explain their responsibility for preparing accounts. And see, if you don't prepare accounts, shareholders will not understand company's position and their the investments, whatever they have done, whether it has grown or not. And the potential shareholders will also not understand what is happening in the company. So it's very important to do that. Director should ensure that it is happening, and only for going concern businesses the statements are prepared, not for seasonal businesses. It doesn't require, if you're selling woolen clothes in winter season, do you think you require statements to be submitted or shown? No, it's like you can just maintain a book and you can write down things and you can see what's your profit or loss in that trade, correct? Hello,
Oh, yes, sir.
are you following, Fatima?
Yes, sir.
I think you lost somewhere. Okay, now directors, am I going fast?
No, sir.
Yeah, so directors should present a balanced and understandable assessment of company's position and prospects in the annual accounts and other reports such as interim reports and reports to regulators. So it is not only the shareholders, they have to share the reports to the regulators also, they should share the reports. Regulators also want to know what's happening in the company. Okay.
Yes.
Company should conduct audit at the end of the year, and these audited reports only are trusted by the shareholders because auditors are the ones who are appointed by the board of directors, and auditors are legally, okay,
Yes.
professionally, of course, and legally they are bound to like perform their tasks very professionally because it's a very responsible task they are performing, and their statements, whatever the audits happen, if the auditors do any malpractice, their license will be cancelled. So no one can play with their own with their lifeline or bread and butter. Am I right? Hello.
Oh, yes, sir. Can you hear me, sir?
Yeah, now I can hear, Fatima. So I'm done with the chapter, Fatima. So
Okay.
you have to go through this completely and wind up. And
Okay.
I will within some time send you the video of regulatory framework. See, that is F7's regulatory framework would be more advanced than this. Okay.
Okay, sir.
So there's a chapter called conceptual framework and regulatory framework. I'll send you all those videos. You watch conceptual framework, regulatory framework. It will be a revision kind of thing for you again. Okay.
Yes, sir.
So I'm done with these two chapters. Now the next chapter, I think this qualitative characteristics also is covered in that conceptual framework and regulatory framework. I'll see. If it's covered, then all the three chapters are done.
Okay, sir.
Just a second. I'll see whether it's not. Then I will only take care of this chapter. Yeah, these all are covered. Yeah.
Okay.
Yeah, this everything is covered. Materiality, substance over form.
Yes.
Okay, no problem. This chapter we both will do accrual basis and all, because these are new things for you, na?
Yes, sir.
Because no, see, IASB's conceptual framework, I will share the videos with you. Some topics like this is completely covered in those videos. Going concern is covered. And but what we can do is we can just discuss the examples like illustration 1 in one class. Accrual basis we can discuss. I have explained there also, but some example is there. We can discuss that. Okay.
Yes, sir.
Rest of the things are there in that. No need for me to like, only I will explain the examples to you. You see the video, get the theory, only examples I'll take care. Okay.
Okay, all right, sir.
So I'm like the videos what I'm giving to you will cover these two chapters completely and thoroughly. That is chapter
Yes.
number 2 and 3. 1, 2, 3 are done almost. I have to just start the books of prime entry. That is that subsidiary books tomorrow. Okay.
Yes, sir.
If I take that, 5 chapters are done.
Okay.
So
sir.
then we can start from here. Yeah. So Fatima, like, shall we take F2 right now or tomorrow? It's your wish. Whatever you say, I can do.
Can we take it tomorrow, sir?
Tomorrow?
Yes, sir.
Okay, then I'll send you these two topics videos. You go through that today, tomorrow, whatever time you have. And tomorrow we'll take the chapter number 2 of F2. Okay. Now I will take 2 classes of F2 back to back. Why? Because this is done.
Yes, sir.
This one and this one I'm giving you as videos. Okay.
Yes, sir.
And this is done. So almost 4 chapters in this are almost done. So we have to cover up more 2 topics from F2. So tomorrow's class, day after tomorrow's class, I'm only going to take F2. Okay.
Okay, sir.
Okay, Fatima. Send.
Yes.
Then tomorrow what time?
You tell me, sir.
Either evening 5:30 or 8 o'clock. Let's fix tomorrow.
Okay, sir.
That's okay, na?
Yes, sir.
So tomorrow, so I'm sending conceptual framework, regulatory framework videos. Examples will be due. We'll take in one class. And so 1, 2, 3 done. 4 also done. 5th one we will cover up. This 5 will be done. Okay. And next 2 classes F2. We'll take second, third chapter of F2. Okay. Okay, Fatima. Thank you so much. Yeah. Thank you.